So we've got $1 billion worth of value that the company represents essentially tomorrow when we're in production. And if you divide that by the number of shares, that gives you the value per share that the company is potentially worth once it's in production.
Rolly from FYI Resources, thank you for taking Arne and my questions. Now, my question is regarding the definite feasibility study that you guys have for your HPA project. For retail investors, this could be quite complex, a feasibility study in general. So could you perhaps walk through the different terms? So for example, the after-tax NPV, the internal rate of return, and some of those terms, and explain them in a bit more detail.
Yeah, sure. So quite simply, the NPV, I think that's the calculated or assessed value of the project with sufficient number of discounts to provide a realistic number of what the project could be worth at a point in time, and that point in time is generally after full production. So we've got $1 billion worth of value that the company represents essentially tomorrow when we're in production. And if you divide that by the number of shares, I can't do that calculation, but I'm sure your viewers can. That gives you the value per share that the company is potentially worth once it's in production.
All right, perfect. And could you also walk through internal rate of return? What does that mean?
Yeah, so the internal rate of return is essentially a measure of your investment in the company and how quickly your investment return provides you with the return, I suppose. So it's just a financial metrics. The higher the RRR, the better the investment returns to the investor.
Excellent. And then two more terms I really want to discuss. CapEx, capital expenditure. Can you perhaps explain what that figure actually means?
Yeah, so CapEx or capital expenditure is the amount of dollars that is spent to build and get into construction and into production of a facility. So in this case, we're building the HPA facility. So it's the amount of dollars that is spent to build and get that facility into production.
Excellent, thank you. And then lastly, the operational expenditure. Perhaps you can explain that number as well?
Yeah, so OPEX or operational expenditure, that's the cost of production per tonne or per unit. So how much does it cost the unit of tonnes to produce? So we're producing 10,000 tonnes at about $6,500 US a tonne, and selling it for about $25,000 to $30,000. So you can work out the margin that this company produces.